Okay, what's up? This is video number 2 for March 17th, St. Patrick's Day. And this one, we're probably just going to mostly look at regional banks, maybe other companies if we come across, and just review some articles that I'm seeing in 15 minutes. Not a lot of time, but we're just trying to pump out more content, more videos to build a base for the channel. So there's a variety of topics to talk about. And I think this one is especially fun, actually, that we have a banking crisis going on, and it will be really interesting to see if it is a real crisis and that reverberates through the economy. My feeling is that at this point it is really fresh and early. It won't. I don't think it's going to affect the Main Street maybe this time, because the Fed has been telling us that the consumer is really strong. Everybody's got jobs. Everybody is spending money. So Main Street seems pretty healthy, and there seems to be some cracks in Wall Street, like there always tend to be. It seems like we're in a rate tightening cycle, and we were in 2008. And what were the scapegoats, or what were the issues, or what was the asset class that was destructive? It was like derivative-based assets, right? Which carry a lot of risk. So an asset that works off another asset. I think Bitcoin or cryptos are kind of like that, especially Bitcoin or Ether, the larger, more established assets. And not only that, but just like far-flung software companies, high tech in sort of the financial realm. Anyone tied with that probably being affected right now, I would imagine. You had those credit default swaps and mortgage-backed securities, these derivatives. And I think companies can be derivatives too of an asset class. And if an asset class is underperforming, or it's becoming costly to run the business, and the asset class itself is not working out, then that's going to hurt the business. Is a parallel for me. These issues will come again, but I think there's got to be some bank regulation passed, and maybe even some crypto regulation will be probably looked at seriously, and maybe even how companies operate in that. I think Gary Gensler is going to be someone that it will be critical to establishing some order in this realm at this. So I mentioned this a little bit on my last video, and that is this bailout. Let's listen to Trump. Biden.
Administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country.
This is smart in terms of a re-election, but if you think about it, you've got the president of a major country, the most important country with the most important financial system. You've got a president coming out and talking about how sound things are. That's not the greatest position to be in, right?
Deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs, small businesses, the banking system overall, I instructed my team to act quickly to protect these interests. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. All customers who had deposits in these banks can rest assured they'll be protected, and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions of that.
Okay, so that is something pretty important. It's fees that the banks are going to pay. So I was actually taking a look at the margins of banks, and they're pretty healthy. Okay, This is a look at the regional bank index on Finviz. So these are banks that have a market cap from 10 billion to 200 billion. Look at their profit margins. And this is sorted by, let's sort by the size. Look, US Bancorp, PNC, Truist. These are pretty strong banks. They've been around a while. They've got substantial market caps. And look at those profit margins, 30%, 37, 35. Very, very healthy and steady return on equity. And look at those dividend yields. Right now, they're looking pretty good. I think banks like this will actually come out on top, and 5 to 10 years from now, I think they'll be fine. I have a feeling that this is probably the Silicon Signature, and these smaller banks is probably isolated to really niche orientated banks. But US Bancorp and PNC, they're really well established, I think, from the East Coast. They've been around a lot, and I think they should be fine in terms of looking for a dividend yield. However, from a profit margin point, I think if they're going to be paying more fees and there's more regulation, this might not be so good. And we can also take a look at diversified banks. This is Citigroup and Wells Fargo. And you know what? Surprisingly, their margins aren't that big. And this could be because of fees that they're paying. I don't know. Mega banks. You've got Bank of America and JP Morgan Chase. They are really the juggernauts. They're extremely healthy. I think these are going to be the big winners is Bank of America and JP, because they're large money center banks and run very, very well. You could see from their dividend yield, it's not as juicy as it is for US Bank or for PNC. I think those two stocks are probably taking the brunt of the beating on the regional space, and that's why their yields are so good and why I think it might be good to buy. Here is Janet Yellen coming out and talking about how the Treasury will pay back its debts. So not really good stuff coming out in terms of the fiscal house. It looks like the United States fiscal house is not in order, and it seems like I can't talk properly when the camera's on me, like Biden. Yeah, so they're planning to pay off their debts and avoid a default. I mean, if that happens, that would be devastating to China in terms of their investments, right? And that creates bad faith. That could create issues. Maybe it could instigate war, you know? If you think about like those mobs and stuff like that, if you don't pay your debts on time, you're getting chopped, you know what I mean? So maybe if China doesn't get its, this is extreme, if China doesn't get its bills, get its money in time, it might be forced to take over Taiwan. Who knows, right? Like it's, you know, kind of dragging out that theory, but it's not good. I mean, I think the banks, I think monetary tightening is really a political tool. I think if you leave people to their greed, they're just going to print money constantly, because everybody in the short term gets rich, right? And who cares about what happens in the future? This is not what I'm thinking. This is probably what I think a greedy person who has access to a lot of money might think about doing. Who knows? Right? Yeah, so Janet Yellen is making the rounds around the United States, talking about, you know, hey, we're going to make sure China gets their money. Hey, we're going to make sure everybody's deposits are insured. I mean, is that good? I don't know. I don't think so. Treasury Janet Yellen told senators that government refunds of uninsured deposits will not be extended to every bank that fails, only to those that pose systemic risk to the financial system. That means move your deposits to Bank of America and JP Morgan Chase. Right? That is not good at all. So there are people, there are banks, there are companies, there's money that's going to be lost. And I think there was a Jim Cramer article here, right? And look what this guy's saying. And this ain't to hate on the guy. I love the guy. He got me into the markets. I still watch him, still pay attention. But you know what? Another talking head that is going to say and do a lot to get coverage. And I think he's got the best interest at heart. Honestly, I learned a lot. It got me into the market. It helped me a lot financially, and forever indebted. Jim Cramer says the banking crisis is fighting inflation for Powell and the Fed. So what I think he means by that is basically, this is just a guess off the headline, that like in 2008, it actually caused an economic issue where there were actual job losses. The economy took like 3, 4, 5 years to get back to normal, and by normal I mean employment. It took a long time for employment to get back to normal levels. So if he's drawing conclusions from that the economy will slow, thereby bringing down inflation, then it's helping the Federal Reserve bring down inflation. The Federal Reserve no longer needs to take action to tame inflation. It's because of the banking crisis. Cramer said 10 days ago investors were expecting 50 basis point hike. Powell warned that if inflation remained strong, he expected rates to go higher than previously anticipated. Okay, so that we know is about the expectation of 50 bips based on what Powell was commenting. Yeah, so I think that's what it is. We'll move on in the interest of time. We're on another article. But check this one out. I don't know if this is true. Powell blocked mention of supervisory failures from bank rescue statements. This is an article that's coming out. This might be adding to the fear that is going on. The fear and greed index is at 25. Where are we? Yeah. That's insane. I mean, obviously you don't want that, because that's going to take, I would, if I was this guy, I would agree. You don't want that messaging out there, right? SVB, looking for a buyer. Banks take advantage of Fed crisis lending program. So, this has happened in 2008 as well. And there were smaller companies, relative to, and these are still too. Bank term funding programs. Seems like the Federal Reserve could just create these facilities, or just another reason to create money. So I think it's interesting to watch. It's interesting to take a look at risk assets and any reverberations in the actual economy. We want to look at GDP, employment. Those are big factors for economic activity. So we'll continue to watch that. Hopefully this video was a little bit different than the other one. It wasn't necessarily a trading journal, kind of just covering articles out there, and I just wanted to get my 2 cents on the lending crisis. Hopefully it made sense and it wasn't just a ramble. Oh, by the way, if you can hit like and subscribe, that would be great. You can get some more action and traction. See ya, guys.